Hey everyone, welcome back to Corporate Decoder, the place where we decode company secrets, and today we've got a deep dive into ORIX Corporation's latest SEC filing. Get ready because things are about to get financial as we unravel the numbers behind this global financial services giant. Before we dive in, if you love breaking down complex financial reports into simple, understandable insights, make sure you hit that subscribe button and ring the bell. And hey, we have a fantastic community over on Discord. Join us in the description below. Alright, let's get into this report. This is ORIX Corporation's semi-annual financial report, also known as a Hanky Hokusho, filed in November 2025. They prepared this using generally accepted accounting principles in the United States, or US GAAP. Let's start with the big picture numbers that really tell the story. For the 6 months ended the 30th of September 2025, total revenues were a whopping 1564,497 million yen, showing a nice 11% increase year on year. That means they are bringing in a lot more money than last year. Income before income taxes also saw a massive jump of 52%, reaching 391,482 million yen. And the net income attributable to ORIX Corporation shareholders, well, that shot up by 48% year on year to 27,1096 million yen. This means the company is becoming more profitable and earning more for its owners. Looking at the balance sheet, total assets grew to 17,604,283 million yen. That's a 4% increase from the 31st of March 2025. This shows the company is expanding its resources. This is a good sign of growth. Now let's break it down by segment because this is where the real action is. The corporate financial services and maintenance leasing segment saw revenues increase by 7%, mainly due to more revenue from operating leases finance revenues and equity and net income from investments. Their insurance segment also grew its revenues by 28%, but the star of the show was the environment and energy segment with revenues soaring by 29%. This unit is really powering ahead. The PA investment and concession segment also showed healthy growth of 9% in revenues. This means their private equity and concession businesses are performing well. ORIX USA, however, saw a decrease in revenues of 4%. This might be a segment to watch closely. ORIX Europe showed a modest 6% increase in revenues, while Asia and Australia saw a slight dip of 2% in revenues. Now let's talk profits because that's what really matters. The corporate financial services and maintenance leasing segment saw profits jump 29% thanks to more operating leases finance revenues and gains from sales of investments. The environment and energy segment was the real champion here, with profits skyrocketing by a phenomenal amount. That's over 117,000 million yen, up from a very small profit last year. This is a massive turnaround and shows strong performance in their energy business, likely due to gains on sales of investments. The insurance segment also boosted profits by 24% thanks to higher life insurance premiums and investment income. Scroll Banking and Credit Score, the banking and credit segment, however, saw profits decrease by 4%. This was mainly due to lower gains on investments and higher selling expenses. ORIX USA score, and as we saw revenues decrease in ORIX USA profits. There also took a hit, falling by over 18,000 million yen, resulting in an overall loss for that segment. That's a significant drop and something to consider. ORIX Europe score, ORIX Europe managed to increase its profits by 6%, mostly from higher services income. Asia and Australia also saw a slight profit increase of 3%. So while some parts are thriving, others are facing headwinds. Looking at total assets across the board, they increased by 4% overall, mostly driven by the ORIX USA segment, which saw a massive 20% jump in assets. This was likely due to that new subsidiary acquisition we saw mentioned. The insurance segment also saw a 4% increase in assets, followed by banking and credit with a respectable 3% rise. Total liabilities. Score on the liability side, total liabilities increased by 3%, primarily due to more long-term debt and deposits. This is not necessarily a bad thing, as it often reflects expansion and investment. ORIX Corporation shareholders' equity score. And what about the shareholders' equity that grew by a solid 9%? This is always a good sign for investors, showing the company's book value is increasing. Cash flows from operating activities score. Now let's look at cash flows. Cash flows from operating activities saw a slight increase to 6,013 million yen. That's positive. That means the core business is generating more cash. But cash flows from investing activities saw a significant outflow, increasing to 7,990 million yen. This largely explains the drop in profitability in some segments, as they are pouring money into investments likely for future growth. Payment of debt with maturities longer than 3 months to score financing activities brought in more cash with an inflow of 24,6616 million yen. This was primarily due to more proceeds from longs. term debt and customer deposits. So they are raising more money than they are paying back, which in the short term supports their investments. This overall picture suggests a company actively investing for growth, even if some segments face challenges. They are expanding where they see opportunity in areas like environment and energy and growing their core financial services divisions. That robust profit growth in their insurance and environment segments is particularly noteworthy. Now let's talk about risks. The company acknowledges that investing in their securities involves risks and points to their Form 20 for detailed discussions. They mention potential adverse effects on their business financial condition and operations from various factors. One key risk they highlight is the possibility of being considered a passive foreign investment company or PFIC for US federal income tax purposes. If they are a PFIC, this could mean special tax rules that might eliminate some tax deferral benefits for us investors. So if you're a US investor, definitely consult your tax advisor. Looking at ORIX Corporation's direction, I see a company that is making strategic moves. Their strength lies in their diversified portfolio and their ability to grow robustly in key areas like insurance and energy. The challenge, though, is managing the underperforming divisions like ORIX USA and navigating the increasing investments in investing activities without negatively impacting overall profitability in the long run. They are clearly betting on future growth through strategic investments and acquisitions, which is a classic buffet style play. The big question will be how quickly these investments start paying off and if they can balance this aggressive growth strategy with managing risks in all their segments. Overall, ORIX Corporation appears to be a company on the move capitalizing on growth opportunities while managing inherent risks. The surge in profits from their energy and insurance divisions is a strong positive signal. However, the dip in ORIX USA's performance warrants attention. Their commitment to expanding their global reach and investing in renewable energy projects shows a forward-thinking strategy. What's your take on ORIX Corporation's latest financial report? Do you think their investments will pay off? Let me know your thoughts in the comments below. If you found this decode helpful, give this video a thumbs up and subscribe for more. And don't forget to join our Discord community for deeper discussions. Thanks for watching and see you next time.